Hello investors. It's been another good month for your portfolio. The index has been kind of flat, but your portfolio is approximately up about 2%, which I think is pretty positive, and it's a back-to-back month of outperformance. But one has to think deeper and realize that what is causing this. And I think this is nothing but the outcome of the changes and churns we made. Last year was a difficult year, and we expressed that, share that with you. We made the changes. It's important to be reflexive and align with the trend, because as you know, we are trend followers. So what we did was these changes are now playing out. In this month's video, I'm going to actually talk about our top 10 holdings and see how they are positioned technically. So the stocks that we are going to discuss this month technically are among your top holdings: Abbott India, AparIndustries, FederalBank, Hindustan Aeronauticals, ICICIBank, ITC, NavinFluorine, Siemens, SRF, and Varun. So we are going to really discuss the technical position of all these stocks. So it is going to be a very good technical review of your portfolio. So before we start talking about these stocks, let's talk about the market as a whole, because obviously that is the mothership. So what you see on your screen is the Nifty 50 chart for the last 2 years. What you see in the red and blue lines on top is the price movement. Below are measures of overbought, oversold. You will clearly see that in the last one and a half year, the markets have been pretty sideways. So you will find that apart from a rally early in 2021, the markets have almost been sideways. In fact, with a negative bias for the last 1.5 years. The highs were made around 18,600. And where we stand today is about 8% from the highs. So definitely it has been not only a sideways market for the last 1 year with a negative bias, but there has been a lot of churn, a lot of sector leadership has changed. However, we feel that what this market is shaping up, and I know it will take time, you guys know that I'm bullish, but I feel that the moment we break out of this 18,600, we are forming a pattern which gives us a target around 21,500, which is a phenomenal move from where it is. So we continue to remain optimistic on the market in spite of the pain in the short run. And the lower panel, you see something called the momentum indicator. This is a very good indicator which actually explains how the markets are very oversold. At the moment, I feel the risk reward is in favor. A lot of bad news is there. You had the Adani issue, you had banking crisis in the US. But the beauty is that the market is absorbing bad news without really collapsing or giving away much. So when the market absorbs bad news, whenever these bad news cannot be there for infinity, but whenever some positive news comes, the market can rip on the upside, and we belong to that camp. So with that in mind, with a market that has done nothing for almost 18 months, let's now dive into each of the stocks. The first chart I want to show you is of Abbott India. It's one of our oldest charts. This is a 3.5 year kind of chart. You'll find a gently upward sloping kind of price movement. Why we like Abbott so much technically is because you'll be surprised the Pharma index is at 52-week lows, and Abbott is actually touching near lifetime highs. So this is a stock that is showing very good relative strength. If there's anything I would like to own in pharma, a sector we like, it would be Abbott. Because as I said, that you can clearly see that the stock is actually almost making lifetime highs, even when the sector and the market is in a corrective phase. It's been a slow, gradual up move, but as and when pharma or the market recovers, we feel Abbott will be among the first to break out and give us some very good returns. The second stock we are going to look at is AparIndustries. This is a 2-year chart. This is the kind of dream chart as trend followers we like to own. So you can clearly see post its breakout around 800, 900, the stock has almost taken off and it's around 2600. It is a very big part of your portfolio among your major holdings. And it is kind of encouraging, as I said, to see a stock touching lifetime highs and making new highs when the market is well off that. This shows relative strength of your stock in your portfolio. And what is interesting is if you look at the bottom panel, you will find that these blue vertical buildings, this is nothing but volume spikes. So you will see that the stock, apart from being an average volume stocks, whenever the results come out, it tends to surprise the market on the upside. and there is an outstanding accumulation or volume spot, volumes connected with price is always a very positive thing. The third stock we are looking at is FederalBank. Federal again belongs to the mid-cap banking space. In the mid-cap banking space, a lot of stocks have been very having a difficult time, I would say. And Federal is something that is kind of holding up. What I like about Federal is that after the Adani saga, a lot of banking stocks corrected sharply. But Federal was one stock which actually held on pretty good sideways. You will also see that in that phase, the volumes came down. So net Federal was something that really did not get destroyed or disturbed big time, even when banking as a whole was correcting sharply due to the Adani move. So that's what keeps us really positive about the technicals of FederalBank. Fourth, Hindustan Aeronauticals has been in the news. A lot of defense contracts being handed out by the government, and Hindustan Aeronauticals again is our top bets. It's one of your top holdings. This is the chart for the last 2 years, so you can see it actually moving from left to right up, and the stock almost at lifetime highs. But what is very encouraging about Hindustan Aeronauticals is what happened about a few weeks ago. The government offloaded a nice chunk of equity to fresh investors. And generally when such supply comes in, the stocks tend to collapse or they tend to correct because obviously there is a large supply coming in. But what we discovered in Hindustan Aeronauticals is that barring 1 day of down blip, you will notice that in the extreme right how the volume spiked up and the price did not collapse. So this is again very positive. Is one of the fears of PSUs, one of the reasons people don't buy PSUs is the government has a tendency to liquidate when the stock price comes down. But in spite of that happening, Hindustan Aeronauticals held on and continued to make higher prices, which shows that the investor appetite is much more than what the government can also supply. Again, very positive, a big part of your portfolio, making lifetime highs even when the market is not there. Fifth, ICICIBank, a stock we've held for very long. It's been in an upsurge. We've kind of preferred this stock compared to the others like HDFC and Kotak because we are favoring industrial facing banks and we feel that ICICI is a player in that segment. Yes, corrected in the short run thanks to, I would say, the kind of pain that banking went through due to the whole Adani issue. But post that, once the Adani thing is settled, you'll find that ICICIBank has started moving up. And in the lower pain, you'll also find that the volumes have started going up. So another stock in your portfolio, which we think continues to look impressive on the long run. ITC, a recent addition. ITC is one such stock which, people have been trying to find the bottom in frustration for years. But because our style of trend following, we wait for breakouts to happen because we have no time or money to waste and get frustrated in an accumulation which may last many years. Post breakout, we get into such stocks. We've got into ITC, and you'll again see that ITC is something that is pushing towards lifetime highs. So something we again remain bullish about in the FMCG space. Stock number 7, Navin. This is a very different chart. So what you will notice in the case of Navin is that this has been part of our favorite sector, which was specialty chemicals. So you'll find that the left side of your screen, the stock is trending up. However, in the last 1 year or so, it's gone absolutely sideways. Between the green and red line is because one of the big inputs for most of these specialty chemicals is crude and crude derivatives. And you know that how the prices of crude has gone up. So you'll find that a very good uptrending sector has actually gone sideways. In fact, a lot of stocks in the specialty chemicals have given away 30, 40, 50% gain. But Navin, being a better quality stock with better performance, has gone sideways. Now this becomes a very different story for us. As I said, this is when we get tested. We like the stock. However, it is very important for us to be disciplined. Not very far from lifetime highs, yet not very far from 52-week lows, going sideways. So as the numbers come out, as the price behaves, as crude moves around, I think these are stocks we have to be very sharp on and be emotionless because they are part of our portfolio. They are very profitable. We would not like to give a lot away. Stock number 8, Siemens. Siemens is again a recent addition, part of our electrical goods engineering kind of play. You can clearly see the stock continues to make lifetime highs. We really like this company, we like this business, so that's why it is a major part, and you can clearly see it on the screen how well the prices are doing. Stock number 9, SRF, again very similar to Navin, a stock that has done very well. In fact, it's one of our top holdings, has been profitable for us, and we almost get emotional about a stock like this because it's done so well for us. But as trend investors, we have to be emotionless. It is challenging. And this is exactly like Navin, due to the hike in crude prices, move sideways. We are going to be disciplined. We don't know how crude moves, what impact will happen the price. But rest assured, as and when the moves happen, we will be disciplined and emotionless in our execution. And lastly, I want to bring you to VarunBeverages, a stock that, like Apar, one of those dream stocks which every trend follower likes to have. A stock that continues to make lifetime highs. Even though the FMCG index is not making lifetime highs, you can also see that it has some very good volume and price spurts. So to summarize, you will see that the market a good 8-9% from lifetime highs, but a lot of stocks in your portfolio are pushing to lifetime highs. And that is really what is resulting in the outperformance. This is the work that we have done. The last year has been challenging. However, all the work, I think, is playing out right now. Fingers crossed, we think that this outperformance would carry on. The hard work is paying on. Just one piece of disclaimer, this all looks very simple for you. In the screen, it's visually very, very easy, but a lot of hard work has gone in. So please do not follow what I'm doing, because we put in a lot of work, a lot of research, and we have a lot of discipline in what we do. So with that disclaimer in mind, I leave you for this month. Hopefully, fingers crossed that this phase of outperformance will continue. We will have a major part of our portfolio hopefully touching, and as and when the market revives, which we think it would, these guys would blow out. I leave you for this month. Thank you very much.